Sign it, Claire, or lose your half of the company. My husband, Daniel Whitmore, set the buy-sell notice beside my dinner plate as if he were handing me a utility bill. 10 business days. That was what our shareholder agreement gave me to choose. Find $4 million to buy his half of Harbor and Pine Home Medical Supply, or sell him mine for the same price. If I failed to choose, the agreement would choose for me. I was 53 years old, co-founder and chief operating officer of the company Daniel and I had built over nearly 25 years. I knew our warehouses, our suppliers, our customer contracts, and the purchasing patterns that kept hundreds of home health accounts supplied. Daniel had always handled the banking and financing. I had called that trust. Now he was using it as leverage. $4 million was not just insulting, it was wrong. The company had not suddenly lost the customers, inventory, or purchasing volume that gave it value. Yet Daniel spoke with the calm certainty of a man who had already arranged the next step. He did not threaten to ruin me. He did something colder. He showed me a contract bearing my own signature and waited for it to do the threatening for him. I did not argue about our marriage. I did not ask whether there was someone else. I signed only the acknowledgement that I had received the notice. Then I photographed every page and took the old shareholder agreement from our home safe. Before Daniel learned what I intended to do, I needed to understand one thing. His valuation showed our manufacturer rebates had nearly disappeared. I knew they had not. I knew they had not. After Daniel went upstairs, I carried the notice, my photographs, and the old shareholder agreement to the kitchen table and read until the coffee beside me went cold. The agreement was more than a decade old, drafted when Harbor and Pine was still small enough that Daniel and I could settle most disagreements before they reached paper. I remembered signing the deadlock clause because Aaron Blake, our corporate attorney, had described it as a last resort if two equal owners ever became permanently unable to work together. Back then, the idea had sounded almost theoretical. That night, it read like a trap with my own signature at the bottom. Either shareholder could name a price for half the company. The other shareholder then had 10 business days to choose whether to buy at that price or sell at that price. If I did nothing, I became the seller. I read those lines 3 times, hoping exhaustion had made me misunderstand them. It had not. Daniel had not handed me an angry threat over dinner. He had handed me a clock. What bothered me even more was the valuation schedule attached behind the notice. He had reduced Harbor and Pine to neat rows of earnings, debt, projected cash flow, and adjustments. But one line looked impossible. Manufacturer rebates, money we earned by hitting purchasing targets with major suppliers, had fallen almost to nothing. I oversaw those purchases. Our volume had not collapsed. If anything, we had ordered more in several categories because 2 large home health groups had expanded their contracts with us. I did not know yet whether Daniel had made an error, hidden income, or relied on accounting treatment I did not understand. I only knew the number did not fit the business I walked through every day. The next morning, I arrived at Harbor and Pine before most of the warehouse lights were on. The building always steadied me. Pallets of mobility equipment sat in clean rows near receiving. Cartons of wound care products moved toward outbound staging, and the low mechanical hum of the loading doors sounded more honest than anything Daniel had said at dinner. I went straight to my office and pulled purchasing reports for the prior quarters. The volumes confirmed what I remembered. There had been no sudden collapse that could explain the missing rebate income. By the time Daniel arrived, I had marked 3 supplier categories with a yellow pen and placed his valuation schedule beside them. I found him in his office and asked him where the rebates had gone. Daniel did not look at my pages for more than a few seconds. He said suppliers had restructured programs, timing had changed, and cash flow had tightened. I asked which suppliers, which programs, and which timing changes. His expression hardened. He told me that finance was his responsibility and that I should focus on operations until the ownership issue was resolved. 24 hours earlier, that sentence might have made me defensive. Instead, it clarified something. If his explanation were simple, he could have shown me. I returned to my office and opened the shared forecasting directory to compare his cash assumptions with mine. My access request failed. I tried again. The same message appeared. I had been removed from the folder that held the detailed cash projections for the company I owned equally with him. Daniel had not merely prepared a valuation. He had started deciding what I was allowed to know. I called Aaron Blake before noon. Aaron had represented Harbor and Pine on ordinary corporate matters for years, and until that moment I still thought of him as our lawyer in the uncomplicated way Married people think of a family doctor. His assistant fit me into his afternoon schedule. When I sat across from him, I placed the notice on his conference table and asked one question first. Could Daniel really force this choice on me? Aaron took off his glasses, folded them beside the papers, and told me he needed to disclose something before we went further. Daniel had consulted him about the deadlock provision before serving the notice. Aaron said he had not agreed to represent Daniel personally against me, but the consultation created a conflict serious enough that he could not advise me as an individual shareholder now that our interests were openly adverse. The words landed harder than I expected. I had not known Daniel was preparing this. Aaron knew he had been, but could not become my guide through it. I asked only what he could ethically tell me about the document itself. He pointed to the election provision and said the deadline was not decorative. If I failed to act within the required period, the agreement could place me in the selling position automatically. He would not tell me what choice to make. He would not tell me whether a judge would stop it. He gave me the names of independent litigators and advised me to move quickly. As I left, I understood that Daniel had not improvised the previous night. He had begun building his side of the road before he told me there was a cliff ahead. One of Aaron's referrals led me to Maya Reynolds, a business litigation attorney whose office was 2 floors above a bank branch downtown. I met her late that afternoon with the shareholder agreement, Daniel's notice, the valuation schedule, and my purchasing reports in a thick paper folder. I expected legal language. What I got was discipline. Maya read the relevant clauses, asked who controlled the company's bank relationships, who could authorize transfers, who maintained the accounting system, and what access I still had as chief operating officer. I answered each question as precisely as I could. Daniel controlled banking and financing. Our controller handled daily accounting. I controlled purchasing, warehouse operations, vendor relationships, and a large portion of the customer side. Maya did not tell me the clause was invalid because the price offended me. She said a court would not necessarily rescue one sophisticated owner from an agreement she had voluntarily signed simply because the mechanism had become painful. If I wanted to challenge enforcement, she needed facts showing that Daniel had manipulated the conditions surrounding the trigger, breached duties, diverted value, concealed material information, or committed some other misconduct that mattered legally. I told her about the vanished rebates and showed her the purchasing volume. Maya studied both sets of numbers, then asked whether I could prove the rebates had actually been earned and where the payments should have gone. I could prove the purchases. I could not yet prove the path of the money. That difference mattered. Before I left, she told me not to enter Daniel's personal accounts, not to bypass any permissions, and not to turn a financial dispute into a search driven by anger. Preserve what I was authorized to access. Document changes. Follow the business record. At the elevator, her last question stayed with me. Where did the missing cash actually go? The following morning, I went to Lena Park, our longtime controller, and the person who had sat 15 feet from Daniel's office through years of audits, payroll runs, tax filings, and lender reviews. Lena had worked beside me long enough to know which vendors complained about a 2-day delay and which ones would tolerate a week. I asked her for the standard rebate and cash reports I had reviewed before planning inventory. She kept her eyes on her monitor and said Daniel had issued a new access protocol because of the shareholder dispute. I asked whether that meant my permissions had changed. She said yes. I asked who had ordered it. She said Daniel had. There was no accusation in her voice, but there was something I had rarely heard from Lena before. Caution so deliberate that every word seemed weighed before she let it leave her mouth. I wanted to ask whether she knew what Daniel was doing. I wanted to demand every ledger she had touched. Maya's warning stopped me. Fear was not evidence, and Lena's silence did not tell me what she feared. I thanked her, walked back to my office, and opened the systems that still belonged to my ordinary work. Purchasing histories, receiving records, supplier contacts, contract renewals. Those were not small scraps. They were the map of how Harbor and Pine actually earned money. If Daniel had closed the finance door, I would start somewhere he could not rewrite my memory of the business. I tried once more to open the next quarter's cash forecast. A system notice appeared instead. Permission removed that morning by the chief financial officer. Daniel had the deadline. He had the bank relationships. Now he had the financial files. But he did not have every record of what we had bought, what our suppliers owed us, or what should have been paid. The records Daniel could not erase from my memory were the records I went after first. I had spent nearly 25 years negotiating supplier terms and approving purchase volumes, so I did not need his forecasting folder to know where to look. From my office, I signed into the business portal of one of our largest manufacturers using the operations credentials I had held for years. I pulled purchasing histories, rebate calculations, and payment confirmations for the same periods Daniel's valuation showed as nearly barren. The purchases were there. So were the rebates. They were not estimates. The supplier had marked them paid. For several minutes, I moved between those numbers and Daniel's schedule, trying to find an innocent explanation. The money had not vanished because Harbor and Pine failed to earn it. I downloaded only the records tied to accounts I was authorized to manage, saved copies for Maya Reynolds, my independent attorney, and wrote down the name of our supplier representative. I still did not know whether I was looking at fraud, an accounting arrangement, or something Daniel had authority to do. But I knew exactly where his explanation stopped making sense. I called Eric Dalton, the supplier representative I had worked with for years on pricing disputes and product shortages. After verifying my authority, he checked the account and told me the rebate payment instructions had been changed months earlier. I asked him to read the destination exactly as it appeared in his system. CP Distribution Services. The name meant nothing to me. Eric said the change had come through Harbor and Pine's finance process, though he could not tell me who inside our company had authorized it without retrieving archived correspondence. Because I remained an authorized officer on the supplier account, he sent me a reconciliation statement through the secure portal. It showed what Harbor and Pine had earned when each payment was issued and where it went. The statement was clean enough to frighten me. The rebates had not declined. They had been redirected. I compared the effective date with my calendar and felt the first personal crack open inside the financial one. The change began in the same month Daniel brought in Celeste Boyd, an independent restructuring consultant he had introduced to me 8 months earlier, as someone helping Harbor and Pine prepare for tighter credit. Until then, Celeste had been an irritation more than a threat. She requested reports outside the scope I expected from a consultant and seemed to know Daniel's schedule unusually well. None of that proved anything, and neither did the timing. Maya had told me to separate facts from conclusions. The fact was simple. Celeste arrived the same month the rebate destination changed. What that meant remained unanswered. I carried a printed copy of the reconciliation statement to Lena Park, our longtime controller. Lena had already told me Daniel changed my access permissions, so I asked only one question. Was CP Distribution Services an approved Harbor and Pine vendor? Her face tightened before she answered. She said she could not discuss Daniel's finance decisions with me. I reminded her that I was asking about a company receiving money generated by our supplier rebates. Lena glanced toward the glass wall of her office, then said she could not help me. I stood to leave. Before I reached the door, she said my name quietly and told me to preserve my own copies of anything I was legally authorized to access. Nothing more. Her fear was not evidence, but it was the first warning I had received from someone inside finance who knew the books almost as well as Daniel. Less than 20 minutes later, Daniel summoned every senior manager to the conference room. He stood at the head of the table and called the meeting a financial stabilization review. Because of tightening liquidity, he said, all non-routine spending would require his approval. Then he described delayed receivables, supplier pressure, and purchasing commitments. When he reached inventory, he said our cash position had been worsened by aggressive purchasing before demand softened. He did not say my name, but everyone knew purchasing belonged to me. I wanted to put the rebate statement on the table. Doing that would have told him exactly how far I had gotten. Instead, I asked whether he was claiming our purchasing volumes had exceeded contracted customer demand. Daniel said every department had to accept responsibility for the current situation. It was not an answer, and I let the silence expose that. Then I noticed Celeste sitting 2 chairs to his right. She had no officer title and, as far as I knew, no ownership interest. Yet the spreadsheet in front of her contained detailed cash figures from the side of the business Daniel had blocked me from seeing. When she corrected one of his collection dates without checking a note, I realized she had more current access to our financial assumptions than I did. I asked Daniel whether outside consultants now received broader financial access than the company's co-owner and chief operating officer. He said Celeste needed the information for the work he had retained her to do. I asked who approved that scope. I did, he said, as chief financial officer. Around us, nobody moved. The humiliation was precise. Daniel was restricting me publicly while handing an outsider information he had taken from me. I left without mentioning CP Distribution Services. By the time I reached my office, 2 department heads had emailed asking whether purchase approvals should now go through Daniel. His version of the crisis was already becoming company procedure. I forwarded the stabilization notice and supplier reconciliation to Maya, documented when my access changed, then searched the operational systems still open to me. CP Distribution Services appeared nowhere in receiving logs, freight records, vendor onboarding files, or service schedules I could access. That absence did not prove the company was fake, but it gave me no operational reason for why our rebate money should have gone there. Late that afternoon, I needed an archived vendor presentation from a company tablet used at trade shows. The device was still connected to a shared corporate calendar. When I opened the presentation folder, a synchronization alert showed Daniel's name beside Celeste's on an evening entry labeled Credit Review. I checked earlier entries because I wanted to know whether their meetings overlapped the rebate change. There were several after normal business hours under vague project labels. Private meetings between a chief financial officer and a consultant were not proof of anything. I told myself that before suspicion became a conclusion. The tablet also held a shared corporate travel folder used for expense reconciliation. While looking for a vendor receipt from the same period, I found a hotel expense image that had been uploaded and never removed. The property was a coastal resort. The date was a weekend Daniel had told me he was meeting a lender in another city. His name appeared on the receipt. A restaurant charge from the same trip listed Celeste in the guest notation. I sat alone in the training room and read both records twice. They did not tell me what happened behind a hotel door. They did tell me Daniel had lied about where he was and that Celeste had been there with him. For the first time, I allowed myself to believe their relationship was not merely professional. But belief was not proof, and an affair by itself did not explain CP Distribution Services, the redirected rebates, or the $4 million valuation. I preserved the company records I was authorized to review and told Maya what I had found, adding that I did not want our case built around jealousy. The money still mattered more because the money was what could take Harbor and Pine away from me. The answer came before I left the building. An automated notice appeared in my company email. My corporate credit card had been suspended, and my discretionary expense authority was frozen pending resolution of the shareholder dispute. Daniel was listed as the approving officer. I read it beside the darkened warehouse floor, where rows of inventory sat under lights I had spent years keeping on. My old strategy was gone. Equal ownership no longer meant equal power. Daniel had the financial system and the story being told inside the company. I had one external statement proving the missing rebate money had been paid somewhere else. The external statement changed the question. I was no longer asking whether Daniel's valuation was unfair. I was asking why money Harbor and Pine had earned had been sent somewhere I could not connect to our operations. The next morning, I met Maya Reynolds in her office and placed the supplier reconciliation beside the notices showing my financial access had been reduced. Maya read everything, then told me what she needed from me: restraint. I could preserve records I was authorized to see, request company information through proper channels, and document every change in access. I could not enter Daniel's personal accounts, guess passwords, or treat our marriage as permission to search whatever I wanted. Then she introduced me to Owen Mercer, an independent forensic accountant she had used in shareholder disputes. Owen was 61, soft-spoken, and unwilling to speculate. I gave him Daniel's valuation schedule, the supplier statement, purchasing reports, and the company records I still had lawful access to. I told him I believed Daniel had redirected income to make Harbor and Pine appear weaker. Owen looked over his reading glasses and said, "That is a theory. I need transactions." He began with what the company bought, what suppliers said we earned, what our books called the resulting payments, and what physical activity should have accompanied those payments if they were legitimate distribution expenses. He found entries classified under distribution and vendor support. The payee was CP Distribution Services. I recognized the name immediately. The amounts were not identical to individual rebate checks, but the timing and totals were close enough to demand an explanation. Owen would not call that proof. He asked what CP Distribution had actually done for Harbor and Pine. I had no answer, so I went back to the records I understood best. For nearly 25 years, nothing entered or left our supply chain without leaving evidence in operations. A distributor-generated receiving records, freight bills, inventory adjustments, damaged goods reports, service tickets, or at least a vendor onboarding file. I pulled the periods matching the payments Owen had flagged. CP Distribution Services appeared in none of them. No freight claims. No inventory transfers. No warehouse contact. I checked older vendor lists and asked 2 department supervisors I had worked with for years whether they recognized the company as a freight broker, purchasing agent, or service vendor. Neither did. I documented their answers without telling them why I was asking. By late afternoon, I had built a table showing money assigned to a distribution function with no corresponding physical distribution activity I could identify. That did not prove CP distribution was fake. Maya reminded me that a company could provide administrative services without touching inventory. But the absence mattered because Daniel's explanation would have to fit the real business, not just a ledger category. Owen then overlaid the CP payments against the rebates missing from Daniel's valuation. Month after month, the totals rose and fell within the same ranges. When our supplier rebates should have climbed, CP's payments climbed. When rebate activity eased, CP's payments eased. Owen said correlation was not ownership and timing was not intent. Still, for the first time, I could see a mechanism instead of a pile of ugly coincidences. Maya asked whether I remained an authorized officer on Harbor & Pine's operating accounts. I did. Daniel had restricted internal reports and spending authority, but he had not removed me as an officer. That led me to Rebecca Sloan, our relationship manager at Harbor Community Bank. Rebecca was 51 and had handled Harbor & Pine's banking relationship for more than a decade. I did not ask her for Daniel's personal information or for anything belonging to CP Distribution Services. I asked for Harbor & Pine transaction records I was entitled to receive. Rebecca verified my authority before discussing them, and Maya separately requested preservation of the bank records. There was no line reading stolen money. There were dates, beneficiary names, authorization codes, and internal memos. Several payments to CP Distribution Services had been approved under an emergency vendor payment exception Daniel had created for situations in which delayed payment could disrupt supply. I knew that exception because we had used it during shortages. CP had never appeared in any operational emergency I managed. Yet Daniel's CFO authorization appeared on the transfers. I remembered how many times, during shortages, I had called him from the warehouse and asked him to release an emergency payment because a delayed shipment could leave a nursing facility without supplies. He knew exactly what that authorization meant. It was not a bookkeeping shortcut buried beneath him. It was a tool we had built together for genuine emergencies. Until then, part of me had kept one narrow door open for an explanation in which Lena or someone else in finance had acted without him. The bank records did not prove why Daniel approved the payments, but they proved he was directly connected to them. One payment memo contained a word I had never seen in our operations files: Cedar. It sat in a reference field among numbers and abbreviations. I wrote it down and sent it to Maya and Owen. Rebecca could not identify private owners behind another entity's account, and I did not ask her to cross that line. Every useful answer I had obtained so far had come from records I had a right to see. That evening, I searched public state business records using only the entity names now connected to company documents. Cedar Crest Capital appeared first, followed by several limited liability companies with similar names. Registered agents changed. Mailing addresses overlapped. One chain led to a family trust bearing the surname Boyd. I froze because Celeste's last name was Boyd. That was not proof. I wrote down the filing numbers and stopped before fear turned coincidence into fact. The next morning, Maya found something concrete in documents Daniel had already produced with his buy-sell notice. A financing reference identified Cedar Crest Capital as the expected capital source behind his ability to complete the transaction if I became the seller. That did not tell us who controlled Cedar or whether it was connected to Celeste. It told us Cedar was not an incidental word in a payment memo. It stood behind Daniel's plan to buy me out. For the first time, the financial trap and the personal betrayal touched the same page. I still could not say Daniel and Celeste were having an affair as a proven fact. I had the resort records, private calendar entries, and his lie about where he had spent that weekend. I could say he had concealed being with her. I could say her arrival overlapped the rebate routing change. Now I could say an entity named in our financial records was supporting Daniel's purchase. Each fact had a source. Together, they frightened me more than any accusation I could have made in anger. Lena called me that night from her personal phone. She asked to meet before work at a coffee shop 20 minutes from the office. When I arrived, she was sitting in a back corner with both hands around a paper cup she had not touched. Lena did not bring stolen files. She told me Daniel had instructed her to classify CP payments as distribution expenses and had warned that if anyone questioned the entries, he would say she had chosen the classifications and concealed the details from him. Lena said she followed instructions she believed came from the chief financial officer, but the longer it continued, the less comfortable she became. I asked her to separate what she remembered from what could be verified. Lena identified accounting periods, ledger categories, and several authorization dates. She also said Celeste had attended finance meetings after my access was reduced, including meetings about cash requirements and outside capital. Lena could not tell me what Daniel and Celeste discussed privately. She only knew what she had personally seen and what Daniel had instructed her to record. Then she told me there was one phrase she remembered because Daniel repeated it when people questioned certain decisions. Once Cedar is inside, this gets easier. I wrote the words down exactly as Lena remembered them. I did not ask her to confront Daniel or choose me over him. I told her I could not promise she would avoid consequences if investigators concluded she had done something wrong, but I would tell Maya that Lena had come forward and identify the records that could confirm or contradict her account. Lena nodded. For the first time, I understood that Daniel's control had isolated more than me. He had placed people beneath him where obedience could later be used as blame. Maya moved quickly. Using the supplier statement, Harbor and Pine's bank records, the documented access restrictions, and the approaching buy-sell deadline, she sought expedited discovery and narrowly tailored emergency relief. We were not asking a judge to declare me right because my husband had humiliated me. We were asking for time and records because company value may have been redirected while Daniel invoked a contractual mechanism based on that value. Daniel answered through his attorneys. In the filing Maya sent me, he claimed I was destabilizing Harbor and Pine, frightening employees, interfering with financing, and trying to escape a shareholder agreement because I disliked the price. He described CP distribution services as part of legitimate financial restructuring and argued that my operations role did not entitle me to second-guess finance decisions. Reading it hurt in a bloodless way. The accusation also had a practical consequence. Every hour I spent defending my right to ask questions was an hour taken from the deadline he had created. For years, I had trusted him because I believed partnership allowed two people to specialize. Now he was using that trust as proof that the missing money was none of my business. The court did not give us everything at once, but the approaching deadline produced limited expedited disclosure. Among the communications were scheduling messages and financial planning notes showing Daniel and Celeste discussing the timing of Harbor and Pine's liquidities, squeezed months before he served the ultimatum. The language was careful. I saw no confession and no message saying they intended to steal my company. I saw references to tightening cash, valuation sensitivity, outside capital, and the advantage of completing certain changes before a shareholder trigger. Cedar Crest appeared in the financing plan before Daniel ever told me Harbor and Pine needed rescuing. The same production included company travel and expense records. Those records did what the stray resort receipt alone had not. They placed Daniel and Celeste together. On more than one trip he had described to me as lender or restructuring business. Charges, itineraries, and scheduling records contradicted what he had told me at home. I could not know what happened in rooms where I was not present, and I refused to invent it. But by then, the pattern was no longer one calendar entry and one receipt. Daniel had repeatedly concealed private travel with Celeste, while giving her access to financial information he withheld from me. To me, that was enough to stop pretending their relationship was merely professional. The affair hurt, but I found something colder than rage. I kept remembering ordinary mornings when Daniel kissed my cheek before work, and nights when I believed the tiredness in his voice came from carrying financial pressure for both of us. I could not know when his feelings changed or what he told Celeste about me. I did not need to. The records showed that while I trusted our division of responsibilities, he was using it to prepare a transaction I could not see. Owen kept working because the affair did not answer the financial question. He matched Lena's ledger dates to the bank records and supplier reconciliations. He confirmed that Daniel's authorizations aligned with the periods Lena named, and that the missing rebate income materially affected the cash picture used in the valuation. He would not tell me who ultimately owned CP Distribution or whether Cedar received the same dollars. There were too many layers and not enough documents. His caution made his conclusions stronger. Then Maya received a financing term sheet through expedited production. Cedar Crest Capital was identified in writing as part of the capital structure Daniel intended to rely on if the buy-sell process moved to closing. Several pages concerned debt, security, and conditions I did not fully understand. One fact was clear: Daniel had not begun looking for emergency money after Harbor and Pine weakened. Cedar was already woven into the plan while the weakness itself was being created. I spent that evening in my office organizing the records Maya wanted preserved. The building was nearly empty. On my desk lay the valuation schedule, supplier reconciliation, bank transactions bearing Daniel's authorization, Lena's ledger dates, public filings for Cedar Crest, and the newly produced term sheet. None of them told the whole story alone. Together, they had changed the shape of my marriage, my company, and the 10-business-day ultimatum. For the first time, I had enough evidence to believe Daniel's financial crisis had been manufactured, at least in part. I had enough to show money had been redirected, and enough to show Cedar was involved before the supposed rescue became necessary. But I still did not know how large the structure was, who ultimately controlled it, or what Daniel had promised in exchange for the money. I was photographing the final page of the term sheet for my case notes when I heard the electronic lock at the end of the corridor release. I looked up. Daniel stepped into the executive suite, saw the Cedar Crest file open on my desk, and stopped. Daniel stepped into the executive suite, saw the Cedar Crest file open on my desk, and stopped. For 1 second, neither of us moved. Then his eyes went from the financing term sheet to my phone beside it. I closed the folder without pretending I had been looking at anything else. Daniel asked how much I had copied. I told him I had preserved records my attorney had instructed me to preserve. He said I was using confidential company information to attack Harbor and Pine for personal reasons. I asked whether Cedar Crest had been part of his plan before he served the buy-sell notice. He did not answer that question. Instead, he told me that every document I took out of context would make me look more reckless in court. The calmness in his voice frightened me more than shouting would have. He already knew I had reached Cedar, and he was thinking about how to turn that fact against me. I left the building with the file in my bag and called Maya from my car before I drove home. By the following afternoon, Daniel's attorneys had done exactly what he implied. Maya forwarded me a demand accusing me of misusing confidential corporate information, interfering with financing, and compromising Harbor and Pine's relationship with potential investors. They asked the court to enforce the shareholder agreement on schedule and to restrict me from certain management functions while the dispute continued. Daniel's argument was polished enough to hurt. I was both an officer of the company and a shareholder fighting for control, so he claimed my investigation made me a threat to the business. Maya told me not to answer his accusations emotionally. She also warned me about something more important. Even if we delayed the buy-sell process, Harbor and Pine could still be damaged if Daniel had already used company assets to secure obligations connected to Cedar Crest. I asked what kind of assets. Maya said equipment, leases, receivables, possibly warehouse-related rights. Then she told me to review only the records I normally handled and look for changes I could identify from operations. That sent me back to equipment schedules and warehouse files I had maintained for years. I knew which forklifts were leased, which packing systems had been financed, and which durable medical equipment inventory lines carried lender restrictions. I began with ordinary renewal dates. 2 equipment leases contained amendments I did not remember approving. The language referenced additional security arrangements and cross-default provisions. I did not understand every legal consequence, so I sent them to Maya and Owen rather than guessing. Owen compared the references with public financing records and documents already produced in discovery. The answer came back worse than I expected. Several high-value assets essential to daily operations had become subject to liens tied to obligations connected with Cedar Crest's proposed financing. If Harbor and Pine failed under certain conditions, Cedar's position could reach beyond Daniel's stock purchase and into machinery and assets we needed to fill orders. Until then, I had thought the danger was losing my half of the company. Now I understood that even if I kept my shares, the company itself could be left with a hand around its throat. I walked the warehouse floor after everyone else had gone home and looked at the equipment listed in Owen's schedule. Conveyor sections, packing stations, material handling equipment. items that sounded dull on legal paper, but determined whether a truck left our dock on time. Daniel had always understood balance sheets better than I did. I understood what stopped when a machine disappeared. That difference, which I once considered the strength of our partnership, had become the reason I could see the practical violence hidden inside his financing structure. The next production from Daniel's side arrived 2 days later. Maya called me into her office before sending anything electronically because she wanted us to look at the ownership documents carefully. Cedar Crest Capital's structure ran through several entities, but the schedule finally identified the controlling beneficiary of the relevant family trust. Gregory Boyd. I knew the surname. I did not know the man. Maya told me not to jump from a last name to a family relationship, so we checked public records. Corporate filings connected Gregory to businesses sharing registered information with entities Celeste had disclosed in her consulting paperwork. A public biographical record identified Celeste Boyd as his sister. That was the first time I could state the relationship as something supported rather than suspected. Celeste, the restructuring consultant Daniel had brought into our company, had a brother controlling the capital vehicle positioned to finance Daniel's takeover. I sat in Maya's conference room with the documents spread between us and felt almost nothing at first. I had spent days bracing for proof that Daniel and Celeste were more than colleagues. This was different. An affair could destroy a marriage. This connection could help explain why my company had been made to look sick before an outside investor appeared with medicine. Daniel's attorneys responded that a consultant's relative could invest independently, and that family connection alone proved no misconduct. On that narrow point, they were right. Gregory being Celeste's brother did not prove Daniel diverted $1. Owen insisted we keep the same standard. He traced capital contributions, company payments, supplier rebates, and transfers through the records available to him. He refused to draw a line where the documents did not support one. That discipline produced the evidence I trusted most. Owen's completed schedule showed that the rebate income diverted away from Harbor and Pine, together with other reclassified corporate payments, had materially contributed to the cash moving through entities connected to the financing structure. He could not say that each dollar leaving Harbor and Pine became the same dollar entering Cedar Crest. Too many accounts, dates, and intermediary transactions stood between them. But he could demonstrate that corporate value left our business, helped weaken the liquidity picture used against me, and then moved through connected entities during the same period Cedar's capital was being assembled. He also confirmed that those relationships were inconsistent with Daniel's repeated description of Cedar as an unrelated outside investor. Then Maya found the sentence that changed our leverage. One financing covenant required Daniel to certify that no undisclosed related party transaction materially affected the acquisition. I read it twice. Daniel could argue about classifications, timing, intent, and whether Gregory's family relationship mattered. But the lender now had a question Daniel could not erase by calling me an angry wife. If the relationships were material and undisclosed, the financing itself had a problem. The discovery did not make me feel victorious. It made the scale of what I was facing finally visible. The missing rebates were not simply money hidden for dinners, hotels, or some private life with Celeste. They had helped create the weakness Daniel cited when he told me my half of Harbor and Pine was worth only $4 million. Connected money then stood behind the investor prepared to finance my removal, and liens tied to that financing could reach assets the company needed, even if ownership litigation continued. I had been looking for stolen value. What I found was a structure designed to turn weakness into control. Daniel asked to meet me without lawyers that evening. Maya advised me not to discuss evidence or settlement terms privately, so I told him she would need to be involved. His attorneys arranged a conference the next morning. Daniel sat across from me with a proposed agreement in front of him. He offered the same $4 million for my half, payment at closing, mutual releases, and language restricting what either of us could say publicly out about marital or business matters. I would leave Harbor and Pine. The affair would remain outside public filings. The financial dispute would end. For a moment, I let myself calculate what accepting meant. $4 million was enough to build a new life. I could stop paying lawyers. I could stop waking before dawn with account numbers in my head. I could leave Daniel with whatever consequences followed and tell myself the employees were no longer my responsibility. I was 53. Starting over with financial security was not a small thing. Then I asked whether the agreement required me to release claims arising from undisclosed related party transactions. Daniel's attorney began explaining the breadth of the release. I asked whether I would be required to withdraw objections concerning Cedar's financing representations. The answer, beneath several layers of legal phrasing, was yes. I looked at Daniel. I could not know whether he felt ashamed, frightened, or simply impatient. I knew only what he was asking me to sign. The settlement would buy my silence, where the financial structure was most vulnerable. I told Maya I would not agree. Daniel said I was choosing destruction over reason. I told him I was choosing not to certify a lie by disappearing. That was the closest we came to discussing our marriage. I did not ask him why Celeste was worth this. By then, the question seemed too small. My refusal had a price almost immediately. Litigation expenses were climbing, and uncertainty around the ownership dispute made lenders cautious. Payroll still had to clear. Suppliers still expected payment. Harbor and Pine could not survive merely because I was morally right. Maya warned me that emergency litigation could continue consuming cash before we knew whether the court would grant the relief we wanted. I looked at my personal accounts that night and understood that protecting the company would cost me something I might never recover. I sold the small mountain cabin my parents had left me. It was not a mansion or an investment property. It was a modest place where my mother used to keep quilts folded in a cedar chest, and my father taught me to split kindling behind the porch. After they died, I kept it because selling it felt like admitting there was no doorway left into the family I had come from. The buyer's offer was fair. I accepted it anyway. I also liquidated part of my retirement investments. The money gave me enough room to fund the emergency litigation and establish a temporary payroll reserve while credit remained uncertain. Signing those documents hurt more than I expected. Daniel had chosen a structure that depended on my inability to produce cash quickly. To fight it, I was converting pieces of my past and future into weeks of time. Maya filed for temporary relief against enforcement of the buy-sell notice and against extraordinary transfers or encumbrances involving critical company assets. She attached the supplier reconciliation, bank records, ownership documents, and Owen's forensic analysis. Daniel opposed the request and continued to insist the closing should proceed, unless a court specifically stopped it. His lawyers argued that delay itself could injure Harbor and Pine, and that Cedar's financing was necessary because my litigation had made the company less stable. That argument might have sounded persuasive to someone who had not spent weeks watching the sequence unfold. The day before the scheduled closing, I received another notice from Daniel's counsel confirming that the transaction conference would proceed. Cedar Crest representatives would attend. So would acquisition counsel, and the lender involved in funding the purchase. The court had not yet resolved every issue Maya raised. Daniel was moving forward because momentum was one of the few weapons he still controlled. If the deal closed before our objections changed the lender's view or the court intervened, undoing it could become much harder. Maya asked whether I understood what would happen if the emergency relief failed. I said yes. My election rights could still be forced through the contract. My personal money would already be gone. The cabin would still belong to someone else. And Daniel would know almost the entire evidence trail we had built. Owen joined us late that evening with his final related party tracing schedule. He walked me through each conclusion and each limitation. He showed where the supplier rebates were earned, where the destination changed, where Harbor and Pine funds entered CP distribution services, where the connected entities appeared, and where Cedar's capital formation overlapped the same financial network. He showed me which links were documented and which ones remained inference. I asked him to remove one phrase from a draft summary because it sounded stronger than the evidence. I did not want a dramatic accusation. I wanted something that would survive being attacked. When we finished, Maya said the lender would have to decide whether Daniel's certification about related party transactions remained reliable. That was our strongest pressure point. We did not need Daniel to confess. We needed the people funding the transaction to look at the same documents and understand the risk for themselves. On the morning of the closing conference, I dressed as I would for a difficult supplier negotiation. Dark suit, low heels, no jewelry except my wedding band, which I removed before leaving home and placed in the top drawer of my dresser. I did not know what I would eventually do with it. I only knew I did not want it on my hand while Daniel tried to purchase my silence with the company we had built together. When I picked up my briefcase, the old brass warehouse key caught against the zipper. I had carried it for years on the same ring as my house key. Daniel once told me that Harbor and Pine had begun with one key and two folding tables. I had believed the sentence belonged to both of us. I took the brass key off the ring and slipped it into my pocket. The closing conference was held in a downtown law office with a long table, water glasses no one seemed to touch, and stacks of documents already arranged as though signatures were inevitable. Daniel was there with his attorneys. Representatives connected to Cedar Crest sat on one side. The acquisition lenders, counsel, and finance team joined them. Maya sat beside me. Owen's completed schedule rested inside her case file. Daniel looked at me once across the table. He did not smile. One of the attorneys announced that the closing conference was beginning. I put my hand in my pocket around the old brass key and waited for Maya to open the file. The attorney at the head of the table began reading from the closing checklist. But Maya Reynolds, my business litigation attorney, interrupted before anyone reached the signature pages. She said there were material disclosures the lender needed to address before relying on Daniel's certifications. Daniel's lead attorney objected that our allegations were already before the court and had nothing to do with closing. Maya did not mention my marriage. She slid Owen Mercer's forensic schedule toward the lender's counsel and identified the records beneath it. The supplier reconciliation showing Harbor and Pine rebates had been redirected. Company bank records showing Daniel's authorization of payments to CP Distribution Services. Ownership documents tying Cedar Crest Capital to Gregory Boyd. And public records identifying Gregory as the brother of Celeste Boyd, the restructuring consultant Daniel had brought into Harbor and Pine. Daniel said the family relationship proved nothing. Maya agreed. Then Owen, the independent forensic accountant I had hired after the rebate trail stopped making sense, explained what he could prove. Harbor and Pine had earned rebates that did not reach its normal operating account. Payments classified as distribution expenses went to CP Distribution Services, even though I had found no matching distribution activity in the operational records I controlled. Daniel's CFO authorization appeared on multiple transfers. Money then moved through connected entities during the same period Cedar Crest was assembling capital for the acquisition. Owen would not claim that every dollar made a perfect circle. He said the records supported a material relationship between diverted company value, connected entities, and financing presented as independent. One of the lender's representatives asked Daniel whether Cedar Crest had been disclosed as a related party. Daniel's attorney said Cedar was an independent investor, and Gregory owned no part of Harbor and Pine. The lender's counsel pointed to the covenant we had found and asked a narrower question. Had any transaction material to the acquisition involved an undisclosed party related to a consultant participating in the restructuring? No one looked at me. They looked at Daniel. He said the description was misleading. Celeste had performed legitimate consulting work. Gregory made independent investment decisions. I had turned ordinary restructuring into a conspiracy because I was angry about our marriage. A month earlier, that might have broken me open in front of strangers. Now it sounded like what it was. An argument intended to make documented money movement resemble a wounded wife's imagination. Maya asked Owen to identify the sequence. He pointed to the dates when supplier payment instructions changed, when CP began receiving funds, when Harbor and Pine's reported liquidity weakened, and when Cedar appeared in Daniel's financing plan. The dates did not prove what Daniel thought or what Celeste intended. They proved what happened and in what order. The lender's counsel requested a recess. Daniel objected and demanded that closing continue unless a court had stopped it. The lender's representative said funding would not be released until a related party and fraud review was complete. I watched Daniel's face without pretending I knew what he felt. What I did know was that for the first time since he placed the buy-sell notice beside my dinner plate, he had lost control of the clock. Maya and I waited in a smaller conference room while Owen reviewed his schedule again. I kept my hand around the brass warehouse key in my pocket. When Maya's phone rang, she listened and handed it to me so I could read the email from the court. The judge had entered temporary relief preserving the status quo. The buy-sell closing could not be enforced while the emergency claims were examined, and extraordinary transfers or encumbrances of critical company assets were restricted pending further order. The order did not declare Daniel guilty of fraud. It did not give me his shares or return the money I had spent. It did one thing that mattered immediately. It stopped the irreversible transaction he had built around my deadline. Back in the conference room, Maya informed everyone that the court had acted. The lender had already suspended funding. Daniel's attorney argued that the order was temporary. Maya said that could be litigated. The closing, however, was over for that day. Daniel looked across the table and told me I had damaged the company to save myself. I could have answered with the resort records, the missing rebates, or his $4 million ultimatum. Instead, I told him the company had been damaged when its own money stopped serving its own business. Then I picked up my file and left. The weeks that followed were not triumphant. They were expensive and slow. Every result came through filings, bank records, documents, counsel, or people willing to put their names behind what they knew. I learned through formal notices that Cedar Crest withdrew from the proposed acquisition, while its relationships were under scrutiny. The lender declined to revive the financing after reviewing the undisclosed related party concerns. Without that money, Daniel could not complete the transaction on the schedule he had once presented as inevitable. Harbor and Pine still had to survive. The litigation did not refill our operating account. The mountain cabin I sold did not come back because a judge froze a closing. My retirement account remained smaller. Suppliers wanted reassurance. Employees wanted paychecks. As part of an interim agreement negotiated through our attorneys, Daniel stepped away from financial control while the disputed transactions were reviewed. Independent approval was added for major transfers. Lena Park, our longtime controller, remained in place but no longer answered to one person for extraordinary payments. For the first time, the financial side of Harbor and Pine had more than one pair of eyes on it. Daniel proposed another settlement before the case moved further. It offered more money, fewer public accusations, and language allowing us to describe the collapse as a private marital disagreement complicated by business pressure. He also wanted a joint statement, suggesting we had both contributed to management failures. In return, the divorce and ownership dispute could become quieter. I read the draft beside Maya. There was a time when I would have paid almost anything to protect the appearance of the life Daniel and I had built. I had mistaken privacy for dignity. Privacy did not require me to sign something false. I rejected the statement. I did agree to negotiate the ownership dispute because keeping Harbor and Pine trapped between two hostile equal owners would punish the employees long after it punished Daniel or me. The final structure took months. I learned its terms through our attorneys and signed agreements, not promises made across a kitchen table. Daniel would sell his interest under independently reviewed terms. The valuation no longer relied on the artificially weakened picture he had handed me with dinner. His control over finance ended permanently. I had another choice then. I could have pushed to own as much of Harbor and Pine as financing would allow. Part of me wanted one document proving Daniel had failed to take the company from me. But replacing his concentrated power with mine would preserve the same weakness in another form. I chose differently. A substantial portion of Daniel's interest went into an employee ownership trust. I acquired the remainder through financing, reviewed independently from the structures Daniel had used. We added outside board oversight, dual authorization for major transfers, written related party disclosure rules, and reporting channels that did not depend on one spouse trusting another. None of those controls were romantic. That was why I trusted them. From the documents and notices provided through the case, I learned that Cedar's planned route into Harbor and Pine had collapsed. Gregory Boyd's investment vehicle lost the acquisition it expected to finance. Celeste no longer worked for Harbor and Pine, and the consulting arrangement ended under the new controls. I never needed an apology from either of them. I did not know what Celeste told Daniel after the financing failed, and I did not ask. Daniel and I divorced. There was no dramatic final conversation. Our attorneys handled most of what remained because there was nothing useful left for us to solve alone. When I signed the divorce documents, I thought I would feel the exact moment 27 years disappeared. Instead, I noticed the pressure of the pen and the quiet of the room. A marriage could end in a few signatures. The trust that made its destruction possible had taken decades to build. I paid for the outcome in ways no court order could reimburse. My parents' cabin belonged to another family. I had spent savings meant for retirement. I lost the version of my past in which Daniel and I had built Harbor and Pine for the same reasons. I could not make those years false because what came later was ugly, but I could no longer use them as proof of who he had remained. Lena stayed with Harbor and Pine. After cooperating with the review and answering for the entries she had processed, she returned to work under the new authorization system. I did not treat her silence as harmless, and she did not ask me to. What mattered was that no controller would again be placed where one executive could order a questionable transaction and later threaten to make her carry it alone. Months after the closing that never happened, we converted part of our original warehouse into a training and operations center. New employees learned inventory systems there. Supervisors used one room for compliance training. The first time I walked through after the renovation, the concrete floor still carried scratches from equipment we had used decades earlier. I had the old brass key in my purse. For years, it had hung beside my house key because Daniel once said Harbor and Pine began with one key and two folding tables. I used to hear love in that sentence, then I heard betrayal in it. Standing in the old warehouse, I finally heard something else. The key had never belonged to our marriage. It had opened a door. That was all. I had a simple display case mounted in the employee training room. Beneath it, a small plaque marked the year Harbor and Pine opened and honored the people who had built, worked in, and protected the company through the years. Daniel's name was not singled out, neither was mine. I opened my purse, took out the brass key, and held it one last time. The metal was worn smooth where my fingers had rubbed it for decades. Then I placed it inside the case and closed the glass. I walked out of the room without putting it back on my key ring,